Okay, testing 1 2 3, testing 1 2 3. Sorry for being a little bit late. Internet problems, but I'm here for you because you, my friend, are my sweet baby. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You guys want the old version of the disclaimer? Let me remind you that the purpose of this webinar is education. This is not an alert service. I'm not here to make trade recommendations. I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. Trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I've been saying that for 14 years. Stay small, stay humble. Hello, ni hao ma, namaste. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. We're a boutique foreign exchange brokerage firm, and I am charged with the duties of earning your loyalty and respect, while at the same time helping you become a conservative, disciplined, successful, and profitable trader that will choose TradersWay as their prime brokerage firm for the successful Forex trading business. I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Except the first Friday of the month, I'm at FX Street, where I have been doing trade non-farm payrolls live for just about 12 years. So nice to have you. Please get involved, ask questions. Participation is what I like to see. So let's start with the Great British Pound. What's so great about it? So the Europeans have sat down with the Brits, and apparently the Brits don't know what they're talking about. They're like, wait, we hear like 2 or 3 different versions. Like, you're not even negotiating for the same things. Like, is this a weird tactic you're playing on this? This confuse them by looking confused? Maybe they teach that in grad school at Oxford, huh? Have you read anything about that? That's why Theresa May is out there negotiating. Because apparently they're like, well, this guy says this, and that guy says that, and this woman. So, dazed and confused. So I thought they should send the guy from Catalonia out there who just doesn't get answers to clear questions. Let's send that guy. So you want to leave the European Union? Well, I don't know. That depends what you mean by European Union. Well, how do you define it? What do you mean by leave? We're not going to move if that's what you mean. So anyways. So yeah, so there's the world we're in. Nobody knows what's going on. China's going to take over. That's fine. Oh, did you go to the 5-year meeting? You know, I really like, I don't know if I'm going to be thrown into capitalist prison for this, but I kind of like, actually I really like the Chinese 5-year plan, where you actually have a business plan. I kind of like that, like clear and focused goals. Seems like a radical new idea that maybe the West should pick up on. Like, here's what we're going to do for the next 5 years. Wow, that would be so great. Right now what happens is we find out what might be discussed over the next 6 weeks and then dropped. So anyways, so we got some big things going on in China. great. But the UK doesn't know where it's going to be in 3 years. Meetings to have meetings, yeah. Well, I think I told the old story when I worked at Cisco Systems when it was a small startup, just 3 buildings. Now it owns all of San Jose. But we actually had a meeting about having less meetings. And I knew right then and there I couldn't work for a big company. I just can't. The stupidity and the gross negligence and waste of time and money. So anyways, check it out. We discussed yesterday on this Kiwi. Okay, let's go Kiwi here. Kiwi, we said there were 2 buy zones. This one and this one. Right? And I'm fine with either. If you're setting up for a long. Those are 2 clear areas of support. The one down here is also a clear area of support, but a lot less probable for the bulls. A lot less attractive. Now, it will probably bounce. If it does fall down there, it'll probably bounce, but it's supposed to bounce now if you're a bull. If you are a burr, we discussed this yesterday and maybe even Monday. I think it was Monday, wasn't it? Monday, we have an MM2WM3 cluster, which is a perfect, if not the only, sell zone. Now, there is a sell zone up here, but like this one, much, much, much less attractive. Oh, Robert says I talked about it Monday and Tuesday. Okay. So we set this up for a sell at 72. I mean, it's still not a lot of money, right? Was it 72? I mean, look, it's nothing. It's pennies, yeah. So it's weird. I look at that, I'm like, it's only 60 pips, 70 pips. Shouldn't even waste our time on it. But that's that. So if you recognize this as a bear and you're worried about it, which I don't see why you couldn't be worried about it, it comes down to your level of aggressiveness. If I was a bear, I'd say we're going to be challenged here and here. Do you know why? Because I know if I wasn't a bear, if I was a bull, I would buy it either here or here. And that's why you need to work both sides of your trades if you're going to be a long-term survivor. Okay, let's go back to that pig. We also had a plan on Monday, and maybe even Friday, but certainly Monday at that pivot cluster, which I also decreed as a 50% Fibonacci retracement. That was at 133. Our target is 500 pips down. We're only, what, 130 pips in profit? Sorry, I'd like it to be faster for you. I know you're excited. You're excited. You need more action. I know. I'm sorry, but we're just doing our best. We still got 350 more pips to go. Now, come on. You must be falling in love with trade planning by now, right? You fire up your PC in the morning and go, life is great, life is grand, life is good, gonna make a crap load of pips today, right? Yeah. PC is never off, yeah. Philosophically speaking. What happened to Grandma? Oh, her laptop died. Grandma never sends me Skype messages. Grandma's laptop. That'd be horrible. All right. So yeah, I mean, right? So I back out. You should see all of this. It's pretty clear. You're like, Wayne, but it's only been falling for 5 weeks. I don't like to sell when it's only been falling for 5 weeks. I like to wait for like at least 8 or 9 weeks before I take action. It's just I'm not a scalper, Wayne. 5 weeks is like a blink of the eye. I like to confirm my confirmations. Okay. La la la. Oh, we shorted here. Should be down here. Brooke says, seems like we're poised for a bounce. Yeah. Well, the potential is there, right? And we're looking at probabilities. So that looks like a very nice place for a bouncy bounce, don't you think? Okay. I would call it secondary, but it's definitely there. I mean, to ignore it would be like an ostrich sticking its head in the ground. Right? So we know there's a challenge here, which I've already drawn for you. Why wouldn't it bounce here, right? Of course it's going to bounce here. So the thing is, if you're a bear, what will take you out of the trade, or what will make you move your stop? Or have you moved your stop? Is your stop already here and you're like, I'm already moved? Right? But to ignore this is to not be a money manager or a risk manager. And you're supposed to be a risk manager. Okay? So how are you going to play it? You got to talk it out. Now, on the smaller time frame, something like this would be wonderful. Uh, Obviously, it's not a trend on this time frame. If it does that, let me see if I can squeeze this, because we're not making we're not making 1618, 382s. In this case, we're essentially double bottoming, right? What are you going to do as a bear if it does this? I'd say let it come back down to the pivot cluster and take profit. If it stays at this level, then I would assume some sort of range and then maybe a break on the higher time frame, like when the 21 catches up and then pushes us through. So that would make it kind of look like this. I'd go another one. Okay. Hammer it down. Thoughts? Robert, I am struggling with adding positions to, but yeah. Well, first of all, you need to ensure that you're in a trend. Okay. And this on this time frame, this isn't trending. Okay. One 1633. What does that say? 116.50. Oh, that is perfect. You know what this says? Euro dollar down to monthly M1 and then up for the rest of the year. That's not me. That's potential technical analysis. That's interesting. All right. Help me with this one. I can see we talked about this being a top. Was that yesterday? Yeah, the swing traders made their money already. That is true. So if you bought this as a bull on Monday, just basic setup, just straight out of the swing trading course, you took profit up in here. It's not a lot of money though, right? What is that? 124.75, 125.80. Yeah, so maybe 100 pips. Not the world's greatest swing, but now we're up in here, right? And we talked about the double top in a weekly target. Yeah, Robert's like 100 pips at best, and it's probably more like 75, depending on if you got in early or late, right? You could have got this. You could have got in this in the first minute of trading. You're like, oh man, we just kicked off the M2, and your stop is down below the S1, basically where this is. And by the end of New York, you're like jamming profit. But anyway, so you can see we get to the double top at the target, and what happened? It fell. But no, what actually happened? I can see red candles, but what actually happened? Bulls got out where they were supposed to. And I want you to look at this and say the vast majority of market participants, which could be thousands of professional traders, did what they were supposed to do. You know what I'm talking about? Look at Robert. Lose 40 to make 100. You don't like that risk reward ratio? John says it's above the weekly. No, it's done. It's dead. It's over. It already. Robert says I stayed away even though I entered the week $1. Oh, not sure if that makes sense, but anyways, Monday obvious was a buy. Top was obviously there. We've hit the top. Now that swing is dead. It's over. It's done. So now the thing is the next part of the down going to start? So this is where you now look for role reversals the opposite way if you are now a bear or were a bear waiting for the setup. Well, John, we're expecting Friday to move the Canadian dollar. Also, Wednesdays are moving days for the CAD. So, yeah, COT was, What was happening on CAD last week? Well, how about later today or Friday? That's what, so, but I know what you're saying. Okay. It comes down, you need to make a decision. Is this going to top out or not? You could say, well, if it tops out and Canadian dollar gains strength again, how do I analyze where we're going? Are you going to call that a 786? Well, it's certainly not a 618. So a 78, what does a 786 predict? A higher low, or at best, a double bottom. Okay, so you can see I already have the double bottom as a target. We'll leave that for another day. Okay. Now, once you've decided what we're doing, then the rest is easy because then you just drop into smaller time frames and do what you say we're going to do. Okay. You see, if you're a bear, you need to be waking up here. So there's CAD. Why don't we look at oil? Oil has gone up 2 weeks in a row again, which is really nice because we have been bullish since the 3rd week of August. 1, 2, 3, 4, 5, 6. We're in our 7th week of me calling a bottom, going from 45 to 55. Cool. Nice. Up, 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 down, down, buy, up, 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 up. Hopefully we get to the 55 area. Current monthly R is 54. Our current target is $55.25, and we identified that 10 days ago. How nice. Isn't that neat? So for your USD CAD to fall, this should rise and stay above 52. It's going to have problems around 54, and maybe get to 55. And that would be nice. That would be a nice month of October. And October being October, I'd actually like it to see 56.5, but I'm not going to call that because, what was it, 7 weeks ago I said 45, 55. So I kind of have to stay there. But it didn't go to 45. It went to 46 and created a bottom. So if we're going to play the $10 range, which is just something I randomly made up because it's important to human psychology to have round numbers. If we're going to go from 46, why not say 56? And 56 is the R2 anyway. So I'm like, yeah, I'm okay with that. Sure. Sure. That'll be fine too. Sure. Why not? You guys with me on this trade? At least, intellectually, we went like every day, little pieces of the puzzle over and over and over again, right? Like, for example, do you remember drawing the channel as a means of proof that we've broken out so that you can catch the pullback? If you didn't buy it at the bottom, you can catch the pullback. Look how beautifully it worked. Straight up, back into the roll reversal, clearly broken out of the channel. So you should have gone from 50.50 to, let's say, 52.50. That's $2,000, bro. Slip me some pips, brother. let's see. Let's take a look at our Aussie yen. So we predicted the bottom, which you should be in down here. Then we saw the higher high, higher low, so we predicted the roll reversal, which didn't here. Then I dragged the line all the way across yesterday and said, well, if you were going to buy it again, you would buy it over near this orange line, which it then did, and now is back up. So the first trade is from 87.50. I guess it's only 88, right? So 50 pips. So that's going to be about 50 pips. That's going to be 50 pips. Slow though, right? It's slow. It's slow, but we're trying to create something here. We're trying to create a trend. Right? So the 618 predicts the 1382. 1382 is the monthly R2. So we're on our way to 92. So there's only 400 pips left in that one. Well, the thing, Ryan, is I'm not sure what's going on in the Chinese markets with the 5-year meetings going on. They're most likely manipulating the markets. Right? The last thing they need is to be having a 5-year plan with the entire government getting together and the stock market crashes. So if anything, I'd play it like it is manipulated, and of course the manipulation would be to do whatever it takes to make it go up. There's also the Japanese election, that's correct. So this is easy stuff, right? Right? Can you see how we set this up going back to the beginning of August? Right? So let's go back through the intellectual exercise. At the beginning of August, I said, all right, take your hats off, take your scalping hats off, right? And put your position hats on. No more shooting at rabbits. We're going after big game. We're going after bear. We're going after moose. How many people can confirm we had some sort of conversation like that right around here at the beginning of August? Sort of the change your mindset discussion. What we did last week is no longer going to happen starting at that moment. Okay? Part two, by the way, that is probably the most important thing, the fact that you just changed your plan. Can you see how just something as little like, okay, I'm not scalping anymore, that's enough of that kind of thing, right? That is most of the alpha, if you will, right? But more specifically, we wanted to look for something, some sort of evidence that the yen pairs were going to rise somewhere around the 3rd week of August. Now we knew this 3rd week, we knew this one, this is week 3. We knew that on the 1st day of the year. So that's a solid 8 months in advance. Well, that on that week, we should be looking for like an Aussie yen to go up. How many people would agree with that? A minimum 8-month lead. Cool. So Robert saw the volcano video. Yeah, watch the video. That's the third week, second week. That's like the second week of December last year. I decided to go to the Caribbean, meet with the central bank. Why not? So, anyways, so that's cool. Made its way up, hit a target. So now we measure this line. Then you measure this line. And this is exactly a 618. Now, you would trade a 5-minute chart the same way. It consolidated, higher high, higher low, higher high, higher low, higher high, higher low, higher low, higher low. This is going to be challenged, and then it's going to go back up. And do you know why? I know. Because I told you on the first day of the year that it would. That's why I'm certain. Thanks, Anthony. Anthony, do you know how to buy me cigars? Not everybody knows, maybe. Huh? You know? You know? Put $20 in my G-string? You go to jrcigars.com and you can buy a virtual gift card. Yeah. Wayne at fxbootcamp.com. Mm-hmm. And I love to hang out with the buddies. Like, yeah, client of mine bought these for me. Yeah. What's my favorite? I don't know if I have a favorite. Right? Blonde, brunette, redhead. Well, how about this? The two best cigar brands in the world would be Monte Cristo or Cohiba. So, no, actually, the real answer to that is the cigars that we smoked in Johannesburg. The Cohiba Bay Hike 56s. That is like, that's the stuff. The for shizzle nizzle. That's what I'm saying, Ron. That's the same one, jrcigars.com. It's a virtual gift card, yeah. You just put in my email address, boom. Yeah, I think in the last 5 years, 5 people have done it. Mm-hmm. And by the way, 4 out of the 5 are wrong. Yeah, right. There's no doubt the Cohiba Bay Hike 56. Yeah. Yeah, that's it. I'd say that's the best cigar in the world. Yep. That's the one we had. That was great hanging with you too, because you're like, hey, let's go get a cigar. Yeah, I want to smoke a cigar with Wayne. And I'm at the cigar box. I'm like, yeah, I'll take this one. And you're like, no, I'll pay for it. Hey, we'll just take the whole box. And the guy's like, really? And you're like, yeah, why? How much are they? Oh, really? And all of a sudden, like, where's Ryan going? Well, he's going to the bathroom. I'm like, no, the front door's that way. The bathrooms are over there. Where's Ryan? I think I think he just got in his car and left. Where did he go? Yeah, they're a little bit pricey. Toomey says, Wayne, besides my theory of seasonality, I love that. Okay, my theory of seasonality. Is there any other reason Aussie should go up? You should look at maybe things like improvements in import-export data. Are they exporting more than they're importing? That would be a change. What are the concerns of the central bank? I know that on the near term, they don't want to raise interest rates. Okay, well, that's fine. There is an absolute interest rate differential between the RBA rate and other major currencies. There is a high correlation with commodities. So not just gold, which is traditional for Aussie dollar, but things like iron ore and coal. And according to things like the Baltic Dry Index, there seems to be improvement in demand in these commodities and a stabilization, if not only, perhaps even a rise in prices. Okay. So all those things lead to maybe a commodity rally. Plus the seasonality tells me it's going to do it. So it's sort of that kind of stuff, right? But besides that, I have no idea. I was just looking at my cheat sheet here, and did I say the import-export data? Yeah. Okay. Good. Great. So, excuse me, Wayne, but can you say what other indicators you have for WTI other than WTI? What are you talking about? All right. Are you looking at this one? The bottom? That is the US dollar index. Whoop, whoop. Now you feel naked, huh? It's called index dollar because probably dollar index is copyrighted or something. By Jmuka Software. John says what? Well, have I compared this to the dollar? Well, let's do that. Oops. Euro dollar seems to be pretty reasonable because the dollar index is heavily euro, unless it's equally weighted. Okay. So starting about, oops, starting about here, I'm trying to get this straight, okay? Starting about here, the dollar index, according to this, started to go up, and according to this, it started to go down. So how accurate does it seem to be? Now, in here, there seems to be a pretty decent pullback and then continuation. Well, in here, there seems to be a pretty big pullback and continuation. Yeah, well, yeah, I'm not trading it. It's just a general confirmation of, what's happening against the reserve currency. Okay. So gold. Gold hit our target, stopped. Great. Is it going to head back up? Depends if you want the Aussie yen to go up. This would be a great place. I already have it marked. Oscillator's okay with it. Hourly's okay with it. And yeah, so this may be setting up a bullish entry. Back to the beginning of life. It's middle of October, almost, what, yeah, middle of October. I think it's going to be a very busy end of the year. Might have to go back to the Caribbean. Might have to go to Dubai. Might have to go to London twice between now and the end of the year. That's a lot of traveling, huh? I'm going to get rid of that. I'd have to go to Boston once or twice as well. Need to meet with a CEO of a hotel group in Boston. Boston. Okay, I think we did all of this. Boston. Boston. Would you call me? Is current data, are you saying it's a little quiet? Yeah, every year, so, every year is different. This year is different. They all got their quirks, right? So, we're at the all-time high of the stock market. Some people are worried that the world's going to end. And really what it comes down to is it's hard to outbeat yourself, right? So how do you say it? Like, I remember when I was running a startup, we had like 24 months in a row of growth in revenue. You know what I mean? But like every month was like 25%, or maybe I think it was even more, 50% better than the month before. Do that 24 months in a row. Pretty soon it gets difficult, right? So I don't know. I think the world's growing a little more cautious. I think there are some geopolitical risks. I think people are kind of trying to figure out what to do with their money, that kind of stuff, right? So do you want to put your money in Europe? You're like, I don't want to put my money in Europe. Well, then put it in the U.S. stock market. You're like, oh, but I'm already in the stock market and it's so overpriced, and CNBC and Bloomberg tell me I should be freaking out. So I'm kind of freaking out. So, people are just, it's less exciting this year than it has been in years past because we're at a different part of that investment cycle. So now you have to tell yourself, this is like the dot-com days where everything was expensive, but it was still going to double and then double again. Right. Yeah. So I think it's just a little bit of prudence and a little bit of reluctance to put their money anywhere else. So yeah, but the low volatility. I mean, yesterday the VIX was at like 9.93, and then or the day before yesterday, and then yesterday it jumped to 10.3. All right, that's low still. It's a 4% increase in one day. I mean, it's pretty. Imagine if the stock market jumped 4% one day. So it's still a pretty remarkable day, but like where's the new money going to come from, right? Right? Yeah, Jacob's going to jump in now. Well, there are many people sitting on their hands because now there's what can you do? You're late. So I mean, I had a conversation with my wife regarding our own portfolio just maybe 2 or 3 days ago. And I said, honey, do you remember when I was running around freaking out? And I'm like, just buy Bank of America at $5. Just buy Delta Airlines at $5. Just buy, like all this kind of stuff. I was really aggressive. And I said, I can explain why Bank of America can't fall to zero. It's going to get bailed out. So you're not risking $5 a share. You're probably risking $4 a share or $3.50 per share. And then I remember asking her, I'm like, look, do you think Bank of America is going to be around in 25 years? Back when it was $5. Do you think it'll be around 25 years? Right? If it gets in trouble, do you think the US government will bail it out? She said, yeah, good. Buy it. What about Delta Airlines, largest airlines in the world? Is it going to go out of business or can it hang on and survive? Will Delta Airlines be around 25 years? It's $5. Will it be around 25 years? Yeah, I think it'll be around 25 years. Good, buy it. That's it. Buy it. So now what? Right? So now what do? Well, everything's at an all-time high. I think it might go higher. What, 300% higher? That's what you're predicting, right? Well, TWA was a different situation, but by the way, I was a big TWA guy. Those were the days. I used to fly from San Francisco to New York. I'd get on the plane and I'd say, I'd take my jacket off. Hey, Cindy. She's like, hey, Wayne, there's my jacket. And then when she'd sit down, I'd already have a whiskey on ice. Of course, they're not supposed to pour alcohol before you take off. But anyways, I got my whiskey and ice. It was great. It's nice to know the stewardesses. That was on TWA. Long gone. Of course, Trump owned Eastern Airlines. All right, so I don't know what we're doing here. So what do you want to talk about? Give me a trade. What is the time? We got oil later today. Don't forget that. Well, Ryan, that's when rich people buy. So first of all, the whole idea of buying the stock market to me is silly, right? I used to be in the VC business. That's where you get up. That's where you sell it to some school teacher with a stupid 401k. Here you go. Here's dogfood.com. You buy the shares for me. I paid 12 cents. I'll sell it to you for $85. Right? So that's one thing right off the bat. But if I had to be an investor in the stock market, I would be a value guy. But you'd be surprised. I don't even like Warren Buffett. Everyone worships Warren Buffett, but I don't think they know anything about him. But I would be the guy that buys a company that will be around 25 and 50 years from now, and I'd buy it super cheap. Everybody loves Warren Buffett. The guy's an a-hole. Did you know that? Like nobody says that. He's the greatest guy in the world. I'm going to follow him on my LinkedIn profile because he's my hero. The guy is a beast. You think that guy's that rich because he's a nice guy? Really? Is that what you think? Oh my God. This guy will steamroll you into the ground. He'll wait till you're on your dying breath, bleeding out, gulping for your last gulp of air, and then he's like, I will lend you $5. Or, hey, I could save your life right now, but I want all the money in your bank. I want all your wife's money, and I want you to mortgage your house and give me all that money, and I'll save your life. I could do it right now. Yeah, and I want your wife. Right? Okay, please, Warren, please. What? Oh, and I'll need you to fax it to me. Yeah, I need you to fax. Would that be an inconvenience? Would you fax that to me in writing? Serious. Everybody loves this guy. This guy will rip you apart and will laugh in your face. But he's my hero. No, I'm saying value investing. So like those are all true stories. Bank of America, buy it at $5. Downside risk is less than 5. It's got to be 350. And then a bailout will happen. That's okay, great. So I got my defined risk. What's the upside? If Bank of America is going to be around 25 years and I can give the shares to my kids, could it possibly be 25 or 50 or $100 a share? And of course, right? Right? Like, yeah, then I mean, I can make 1,000%. I bought Apple at $6 a share, guy. Right? $6 a share. I bought Apple at $6 a share. That was the first stock I ever bought. So anyways, yeah. So now, where are the deals? Well, there probably isn't, right? Probably isn't any deals. Well, so, John says buy and hold. This goes to really currency trading too. If you really want to branch out and think of it that way, the wealthy are those that own. To be a wealthy person, you have to own something that generates income. A rich person simply has income. You're rich because you make a lot of money. You have a great job. You make $400,000 a year. Great, you're rich, but you're not wealthy. You're still poor because you have a job. Poor people have jobs. Do you understand that? You earn income. People pay you. Like you pay someone to mow your lawn or change oil on your car, right? You pay someone to cut your hair. What do? I'm a money manager. Yeah, well, you're like a hairdresser to them, right? So if you have a job, you're poor. You might have a lot of money, so you're rich, but you're still poor because you rely on someone else. They could just walk in and say, you know what? I changed my mind. You're fired. Get the hell out. But I make $400,000 a year. I have a vacation coming up, and you're fired. Get the hell out. Vacation? What the hell's wrong with you? That's why you're fired. You take vacations. Get out of here, right? So ownership, right? So owning a portfolio of stocks that appreciate in value and pay you dividends, and owning a portfolio of bonds, like you're in the business of lending countries money, you're in the business of lending corporations money for profit. I mean, think of how awesome that is, guys. You could run your net worth like you're a bank. Okay, Ford Motor Company, I will lend you money for 8 years and you pay me 9% annually. It's almost like a credit card. And whether you get out of bed or not, you make money. Now you're wealthy. And Forex can be the same too. Like a lot of these things, like this Aussie dollar. I mean, go back. I don't even know if it'll let me. But you could have been buying some of these dips. I mean, look at these dips in the hard times, right? But you could have been buying these dips, man, like in the 50s and 60s and 70s, and literally at 70 cents, right? And literally be still in it. You could be long Aussie dollar at 75. You're up 1,300 pips, but it doesn't matter to you. It's not the pips you're just earning. What if you just built portfolios, right? And somebody said to you, hey, Ryan, what do you do? And you're like, well, I own a $30 million currency portfolio, and I get paid 7 days a week, 24 hours a day. No accounts receivable, no accounts payable. Yeah, every few months I add to the position. And that is wealth. You could be in this. And imagine though, you're also making 1,000 or 2,000 pips a year per trade. It really starts to add up as your portfolio grows bigger. But imagine you never ever got out. And I talked about it. I talked about it in these days. Actually, it wasn't those days. It was these days. I'm like, put it in your will and give it to your children. Right? Literally had those conversations with people. Buy it, put it in your will, and give it to your children and your grandchildren. Here's the Aussie dollar. I bought it at 50. I bought it at 60. Okay? Now, here's the interesting thing. If you own a bond portfolio and your average return is 3%, because it's a lot of corporate debt, and then, and let's say these are 10-year bonds, okay, whatever. Cool. And over the course of 10 years, do you expect interest rates to go up globally? Like what percentage of probability would interest rates go up at least a quarter point? No, I'd say 100% chance. I'd say 100% chance. Okay. Well, you're being conservative. Great. 100% chance. The Fed will raise, for example, whatever. No, I'm not talking about Japan. Okay, but anyways. So, how does that affect your bond portfolio? Your interest rate doesn't change. It doesn't go up. No, the yield is a coupon payment is a coupon payment. So investors in bonds could buy your bonds if you decided to sell them, but they can get a higher rate from somebody else now because interest rates went up. So you have less good of a deal to offer than what the open market has. So your price went down. It's kind of like your stock falling. The stock price fell. Well, you're still holding the stock. You can hold it forever, but the stock price is falling. So in this case, your bond prices would fall because your yield is okay. It's just not great. People get better deals. So your portfolio is actually losing. Now, bonds are interesting because they will mature and you do get your principal back. If you hold your stock and it goes to zero, you lose everything. Also, if the company goes out of business, if you own a stock portfolio, you get nothing. If you're a bond holder and the company goes to bankruptcy, the bankruptcy court pays you first. I think they pay, yeah. Anyways, you get paid, okay, because you're not an investor, right? You're lending them money. You're like a bank. I really like that. There's a huge difference. Plus, you're guaranteed a certain amount of money when they do pay you because you know the coupon rate, you know the price, okay, so on and so forth. All right. If you're a currency trader and interest rates go up and you have a portfolio, how does that affect you? Well, one, you get a pay raise. Your entire portfolio gets paid more money every day. And what does that do to the value of the assets that you're holding that are generating the income? How does that affect you? See, if interest rates go up, the value of your bond portfolio goes down. So if interest rates go up and you have a currency portfolio, it increases the value of your portfolio and you get paid more every day. What? Oh my God, why would you buy the stock market, right? Because you're like, stock market, if the stock goes down, you lose. If it goes up, well, you appreciate, but you know, maybe you get some dividends. I'd much rather be a bondholder, but on top of that, I'd much rather be a currency trader. If you want to be a equity holder, why don't you start a venture capital firm? Right? Poor people invest into the stock market. Yeah, boom. So just food for thought. I don't know where we're going, where you're going, but sometimes these talks are cool. You got to think outside the box. Or like they say, think outside of Africa, right, Ryan? Think outside the cigar box. Yeah. All right. So cool. Right on. So it was a day. It was real. I hope you guys are being wooed by the potential. I hope you found yourself a home and a team to be with. Yeah, if I bring one thing to the table, Brian, it would be an opinion, right? But I'm also trying to maybe be larger than life for you guys, because if you want to be a professional foreign exchange trader, you better be opinionated, because people pay you for that. They don't want wishy-washy. They don't need the guy from Barcelona that can't answer a yes or no question. You're going to have people. So I had a billionaire come up to me. I was at a board meeting. This was many years ago, so you probably heard the story. Anyways, I walk into a board meeting. I'm going around shaking hands before the meeting starts, and go up to this guy. He's a billionaire. He makes at that time when the economy sucked, he was doing about $3 billion a year. So he's probably doing about $6 billion. But at the time, anyways, he's like, "Hey, so what's up? What's going to happen with the dollar?" And I'm like, "Boom!" And I give him a big, straight, direct. I know exactly what's going to happen to the dollar. Boom, 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 boom. And he's like, "Well, what about the euro?" Boom, 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 boom. I give him my opinion, just clear, concise, well laid out, 20-second answer, right? And I think again for the Swiss franc, because he does a lot of hedging. He has exchange risk in like 27 countries, 27 currencies. And he's like, "What?" And so that his hedging group is out of Switzerland. So he's like, "Well, what about the Swiss franc?" And I'm like, "Oh, well, the Swiss franc, boom, 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 just like boom, I got it. I know exactly my opinion on that, right?" So everything was good. Like all of a sudden, the next quarter at the border, I showed up for the next board meeting 3 months later, and I'm standing around with a cup of coffee talking to somebody, and he walks into the room. He looks around like, "There's Wayne," right? And he walks straight through the room, and everyone else is coming up to him to shake his hand. He's like, "Get out of the way! I'm trying to get to Wayne." And he's like, "You were right." And I'm like, "What?" He's like, "The dollar, the euro, and the Swissy, you were right." I'm like, "Well, of course I'm right. Why were?" And he's like, "I sat down with the senior executive vice president of," and he mentioned like one of the biggest banks in the entire world. because he's got billions with them. And he said they sat down, him and his team, they did this big presentation, and after 2 hours they said, well, we don't actually know. We don't know. We don't know, Wayne. We just heard, sorry, we don't know, sir. We don't know what's going to happen. And he said, Wayne, you told me in 22 seconds exactly what was going to happen, and it happened. And I'm like, yeah, sorry. Sorry it took so long. Right? You need to be opinionated. Isn't that what a client is asking of you, right? You want to be a professional money manager one day, right? I want to be a professional Forex trader. I want to run a hedge fund. I want to run a managed program. I want to work in a bank. I want to do something, right? Whatever it is, then you need to be opinionated. And you better back that up with facts, Jack. What do you think that? Oh, well. Like somebody asked me today about the Aussie dollar, right? And I'm like, oh, did you? Oh, no, no, you didn't. Did you just? All right, here we go. Here comes the Aussie dollar, right? You better lean forward, grab your knees, hang on. It's going to be a bumpy ride. 3, 2, 1. First of all, blah, 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 blah. And if you look at this and if you look at that, you go over there and see, it's going to go up. And you should just be able to just overwhelm somebody with knowledge backed up by facts. Like, you're like, wow, did you throw in the Baltic Dry Index, the trend in iron ore and coal prices, the dollar and the gold correlation, and seasonality and import-export data all in 20 seconds? Oh, yeah. Plus, it's made a higher high in a time when it's supposed to be making a higher high, producing a higher low at exactly 618 Fibonacci retracement, at exactly a monthly and weekly pivot point, at a time when 8 months ago I predicted it would go up. So, yeah, guess what? It's going to go up, Jack, plus all the other stuff. Right? You are paid to have an answer. And of course, in that scenario, when you're wrong, it's everybody else's fault. It's the Russians, it's the Saudis, it's the Chinese, not my fault. It's the central bank. Gee whiz, that stupid ECB. No, it was Trump. It was Trump. It wasn't me. But there's always now, right? But anyways, hey, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow here at Romper Room. Cool. Thanks for being on my team. Thanks for being a client of TradersWay, huh?